Welcome, ladies and gentlemen, to Commodity TV and the ZURI Invest Night. We are doing here a lot of interviews for ZURI Invest, and look forward now to talk to the first time to Marimaca Copper, and Hayden Locke, the CEO, is here with us. Welcome.
Thanks very much. Fantastic to be here.
Yeah, thanks for taking the time. It was a little bit unthought of, but fantastic that you are here. Marimaca Copper, please give us a short overview on the company. Did we get an idea?
Sure. Marimaca Copper, we're a TSX listed copper company, although just announced that we're now listed on the ASX as well. We're developing a very unique copper project in northern Chile. We're at an inflection point in our development. And, we're really excited about the potential of this copper project as it goes into production, one of a handful of new copper projects that can come into production in the short to medium term.
Okay, wow, that's super interesting because copper moves this year into a deficit in the world market, and there is a prediction that it will stay a lot of years into in the deficit. So a new copper producing asset would be really well appreciated. What is the status of the project now? What have you achieved 2024?
So we are in the final throes of delivering our definitive feasibility study, which will be done in the second quarter of this year. I think the biggest milestone for us, though, in the last 3 or 4 months has been a movement on our permitting, and we now have a fairly clear timeline on our permits to be able to commence construction. So we submitted our permit application at the end of last year, and we received a positive result in terms of acceptance into the process in February, which gives us confidence that by the end of this year, we should have our environmental approvals in place, which effectively means we would be able to start construction. So permitting is no longer the critical path. We're moving at a rate of knots, developing the rest of the project, going into the debt financing discussions, which are underway, trying to really get ourselves prepared to be in a position to commence construction sometime around the middle of 2026. It's a fairly ambitious target, but that's what we're setting ourselves as an objective.
Okay, super. And how long would the construction be? It would be open pit, I presume?
It's an open pit oxide deposit. The construction timeline will be less than 18 months, but if you consider a 2-year timeline to get to full production, that puts us in 2028 production, but the first full year of copper production in 2029. And I don't think there are many copper projects that have those sort of timelines.
That is not so far away, definitely. With the data set you have so far, as you said, the definitive feasibility study is coming, but with the data set you have so far, what would be annual production? Would you have any byproducts, and where do you see your cost structure?
So the production that we're targeting from the DFS is 50,000 tonnes of copper cathode nominal production. So we're going to be producing copper cathode, which is quite unusual. The reserve life will be somewhere 12 to 13 years. If you include the inferred resource, a mine life of 15 to 16 years. In terms of, this is a very unique project. It's in the low coastal range in Chile, so it's not at high altitude. It's very close to the coast, very close to infrastructure. And because it's very shallow, we're expecting the upfront capital cost to production to be somewhere between $500 and $600 million, or $10,000 to $12,000 a tonne of capital intensity, which is industry leading. If we're anywhere in that range, there will be very few projects that can match that. In terms of operating cost, again, it's very shallow. It's at surface, a lot of the deposit. The life of mine strip ratio well below 1 to 1. So we expect all-in sustaining average costs over the life of mine to be well below 2, somewhere between $1.75 and $1.85. But the first 5 years, which is obviously shallower and slightly higher grade, slightly higher recovery, we think it'll be closer to $1.50 a pound. So in that all-important payback period, it's very, very cash generative. So it is a very nice project. It is at the smaller end of the sort of scale that's considered globally significant, but we're addressing that through exploration, and we've got some very exciting things happening on the exploration front as well.
That would be my next question. What is going on in exploration to say, okay, not only 13 to 15 years mine life, but maybe much, much longer?
Well, there's 2 aspects to our exploration strategy. We actually acquired 2 new shallow oxides, so leachable copper resources within a 25-kilometre radius of our project, which we believe, based on the historical resources are there, which are non-JORC compliant, non-43101 compliant. Based on those historical resources, we see an additional 20 to 25,000 tonnes of potential copper production for 10 to 12 years already. But they also happen to be in one of our best exploration targets, and we're drilling there at the moment. We put out a very exciting drill result at the end of last year, which intersected 400 metres of 0.5% leachable copper, including a zone of over 100 metres of 1.2%.
Oh, that's a lot.
That's a 400-metre step out to the north of the deposit that we've identified. So we see a huge potential to grow that resource And what we're targeting, what our sort of big objective here and our really audacious goal is to show that we're 50,000 tonnes of potential copper production going to 70 or even 75,000 for an extended mine life. So we do have pretty big ambitions.
Super. And if I look now at the copper prices, I think the US copper price is $5.10 per pound. The European copper price, I would call it, the LBMA is $4.45, something like that. So with 150, let's call it even $2 costs per pound of copper. That would be outstanding, the margin.
Yeah, it would be absolutely outstanding. Yeah. We'd be looking at somewhere between $250 to $300 million a year of cash flow. Against that, $500 to $600 million of pre-production capital cost. It's a 2-year payback or thereabouts, which is really outstanding.
Super. And do you have any byproducts? Because that was not answered yet?
No, we don't have any byproducts. So that's a pure copper play.
Okay, super. How do you intend to finance that? Because I could imagine with such a cost structure, you can maybe load a little bit more debt.
It absolutely takes quite a lot of debt, and we've been out to do expressions of interest with a model for all of our potential debt partners. And what we know is it can take quite a lot of leverage, although I think as a management team, we would probably take a slightly more conservative approach. So I would expect somewhere around the $300 to $325 million of debt is reasonably conservative, but not lazy, which means we're somewhere in the 200 to 250, let's call it, $million of equity. In terms of raising, well, obviously the reason that we're listing on the ASX is to broaden the potential pool of institutional partners as we go into the next phase. But we do have already on our register Mitsubishi Corp, probably the preeminent LATAM copper investor, as a 5% shareholder, who would obviously be able to underwrite the whole equity themselves.
Easy.
We have another group, a private South African mining company called Assor, that's a very large and cash flow generative mining company that owns 15%, equally has a significant balance sheet available to invest, and then another fund out of London. So we feel pretty confident that we can certainly finance that in a very favourable way for our current shareholders. But one of the things we're looking to do is certainly expand the pool of our institutional partners as we go into the next phase of development.
Okay, super. So who else do you have on the share registry from, let's say, large institutions? What is management?
So management, we probably own slightly less than 5% once all said and done. There are no other large institutions really, other than Greenstone, which is a private equity fund out of London. They own about 40% of the register. So we are a very tightly held stock. And that's probably one of the weaknesses from an institutional perspective, at least, is that there's just no free float. And so liquidity has been an issue for us. But as we reach the inflection point and there's a need for us to raise money, we'll certainly be able to address some of those liquidity concerns in the future.
Okay, super. How is Chile these days to work in? What would you say?
It's always been great. Obviously, there was quite a lot of news back in 2019 with the social unrest and the sort of voting on a new constitution and a constitutional referendum. Those are very much behind us, those days, and certainly a degree of stability has returned to Chile. It's a fantastic place to operate. People are very well educated. Mining is an enormous part of the economy there, and so they very much understand both mining and the risks and the need for return on capital, but also the importance of it to the economy. So my experience has been fantastic. But like everywhere, as the commodity price goes up, people have their eye on how much they're going to get of that to continue to run the country. So they've been very engaged thus far. I think one of the really good reflections on how it is to operate in Chile is the process that we're going through with our permitting right now. The government has been extremely engaged. They've been very quick to respond to all of our submissions, and we're hopeful that continues.
Okay, super, fantastic. So that is all fine. Very important question also, which just came to my mind. Are you financed until you have the project finance?
So we have at the end of last year, we had $20 million on the balance sheet. That gives us everything we need to deliver all of the work programs that we have underway. We could arguably get to final investment decision for the project, but I don't think it would be an optimal final investment decision. So we'll almost certainly need to raise some more money, but that will be both split on project CapEx, which is detailed design and engineering, getting ourselves construction ready effectively, building out the owners team. But then also we want to put some significant money to work on exploration because we see a lot of potential to add value over the next 12 to 18 months.
Yeah, and as you said, liquidity is an issue. I mean, with a little bit of a share issuance, this could maybe help with the problem.
Hopefully it'll address the problem somewhat. And what we're saying to investors is, it's almost a dip your toe in the water. We'll take you through what we're going to achieve in the next 12 to 18 months. Hopefully we achieve what we say we're going to, and we build that credibility. And then at some point in the early part of 2026, we'll be coming back to the market and saying, we want you to back us for the next phase of development, which is to build this really exciting project.
Fantastic. Super. Hayden, thank you very much. It was a great insight into your company. We wish you well, because the world needs your copper, definitely.
Thank you very much. Very much appreciate it.
Thank you. Yeah, ladies and gentlemen, it was Hayden Locke, the CEO of Marimaca Copper, the next, hopefully large copper mine, large in that sense, from Chile, with 50,000 tons cathode copper per annum, which is scheduled for 2028, 2029 commercial production, which is great because the capex is really for a project that is 600 million, maybe it's 650 million. We will see that after the definitive feasibility study, but definitely that's a low capex for such a great project, and 20 million in the bank. So that helps for this year for sure. But as Hayden said, they need to raise a little bit more money for sure, also for the liquidity in the markets, and they are backed by strong partners so far. So I suggest you have a look at Marimaca Copper. Thanks for watching us, and bye-bye from Switzerland, from Zurich, for the ZURI Invest Night.